Hey guys, welcome back. In today's video, we are talking about AMC exploding, the shorts diversions, the manipulation exposed, and many more in this video. Firstly, we're taking a look at the off-exchange again. 77% for AMC, over 25 million volume is being hidden away. Then the next coming in with NYSE with only 5.75%. So the orders that actually affect AMC were only 1.86 million volume. Now, the reason why we're focusing on this a lot recently is not just because of the fact we're constantly experiencing this, but it's also understanding that the 30-day average for NYSE, for AMC, has been 10.87%. But recently, we've seen a massive increase in the off-exchange percentage and a massive decrease, but you can see here over half with NYSE. And so what we are looking at right now is essentially understanding the price action we're seeing on AMC is getting more and more unfair by the day, because we are getting less and less volume actually hitting the lit exchange to then actually have an effect on AMC. You can see the same applies for obviously the 30-day average as well for the off exchange, 66.97, but right now we're looking at 77.16, and there have been days where it's 80% and of course more. And this is a big factor because one thing we've said is that massive off exchange trading is keeping AMC from exploding. And we can take an example here of 80% off exchange, and this is just during the day. And so this is why we've said that right now we're seeing so many factors that's showing how well AMC is doing. That is showing that AMC is experiencing a lot of capital inflows, a lot of people buying, and what will normally let a stock explode, let a stock take off, is now being suppressed because of the off exchange. And so there's two ways we can obviously look at this. Firstly, we should be confident and happy and understand that AMC is doing well, because if AMC weren't doing well, they wouldn't feel the need to suppress. So with everything that AMC has done, with all of the things that we have been talking about, you can see that AMC is operating correctly. Secondly, when we understand this as well, with the increase in off exchange, it shows that shorts are panicking. It shows that shorts are distressed because they realized how many people are buying and they can't keep on creating synthetics, and they're trying to rely on off exchange, but while still trying to make as much synthetics as possible, but they are failing to do so like they've done before because of the lack of liquidity. And so this is how we know that AMC is winning and that the shorts are losing, because of how much they are obviously struggling right now and how they realize that their own firms are doing bad. On the other hand, AMC is of course operating well. And we can see how this is just another example of how institutions are stealing volume and stealing value away from the retail. You can see here, FINRA charges velocity clearing with allowing manipulative practices such as spoofing from December 2019 to present. Being addressed after 6 years tells you all you need to know about FINRA. A $1 million fine does not do justice for years of harmed investors. And so this speaks to you with so many different angles, because when we take a look at this, we have to understand is that we are still constantly seeing suppression. Multiple people are trying to say that we aren't faced with any suppression, that the reason why AMC is not going up is because no one's buying AMC, nor do people think that AMC is a good company, and that they believe that no institutions is practicing illegal practices, no institutions is allowing, these exploits of manipulation and suppression. Now, to those people who say that, obviously we have shown them the data, which proves them wrong. We've seen how AMC is operating. We've seen how people are constantly buying AMC. Once again, you can take a look at the capital inflow and outflow of AMC. When you take a look at the dark pool trade, you'll see that the majority of these volume are actually buy orders. So a lot more buy orders are rooted in off exchange than sell orders, which is of course normally would have an effect on the price, but because in this case it's in the off exchange, it's not having that effect. And then it's also about understanding that this has been ongoing for years. You can see this is from December 2019 to present, and this is just with one institution. You can only imagine with all of these other institutions that are involved, just how much manipulation is happening in the market. And remember, this is from 2019 to present. And remember what happened with AMC and GME. So it's no surprise to know that AMC and GME has faced suppression since the very beginning up until now, and will continue to do so unless something is done. And what I mean by that isn't just being fined $1 million. We've said this a lot, is that essentially these firms have made multiple millions, some even in the billions, by doing these practices. And for them, it's just a cost of business. And we've given this example out plenty of times. Would you give $1 million to make $100 million in return? And the answer most likely for everyone is, of course, yes. And so until the regulations actually make a serious repercussion, a serious consequence for people who are exploiting these practices, we're not going to be seeing something done. But this is just to let us know that we are not wrong about AMC. We are right about AMC. We are right not only at how well AMC will do, the squeeze about AMC, but also we are right about how much shorts are manipulating and suppressing AMC and stealing the real value away from us. Another thing that's right now is causing shorts to panic and is also an indication why AMC will do well is the current industry and how well it's operating. You can see here, we're looking at IMAX. IMAX delivers record Q3 financial results across key metrics. Record third quarter revenue of 106.7 million, more than 30% year-on-year growth in net income, adjusted EBITDA, EPS, and adjusted EPS for IMAX. And this is, of course, very good for IMAX on its own, but it's also a good indication of the current industry. The reason why I say this is that right now we've known that AMC have the most efficient company, has the most efficient business structure within the industry. Now we're seeing other companies also do well, of course, with the current box office booming and everything. It's obviously going to be related to AMC. It's going to carry over to AMC as well. Now this isn't a post. This isn't something to say that, you know, I'm putting down IMAX or any other companies. Now we've known that companies like IMAX, companies like Cinemark are institutional owned. We've seen the institutional ownership for Cinemark at over 100%, at 120%, but it doesn't take away from the fact that we are all within the same industry. And so if they are doing well financially, so would AMC, and even more, AMC is likely to do even better than them. And so this is obviously very good news and is allowing us to understand how well AMC will do. Another example is you can see IMAX is seeing a surge in global box office based on the mix of Hollywood and foreign local language titles. Now, the reason why I'm bringing this up is because firstly, we've seen how AMC has expanded their reach. We've seen how AMC not only are improving their infrastructures within the US, but also globally as well. We talked about some of their UK cinemas. We talked about other places as well. So we know how well AMC is doing and what they're doing in order to improve it even more. But it's also with the recent thing that we talked about with AMC, which is being that AMC wants, and Adam said this as well, they want to focus on the use of AI as well. Now, what they mean by that is the use of AI to allow films to be dubbed into different languages to, of course, then have a bigger reach. And we can already see here that that is a very good vision, because we're seeing companies like IMAX which are showing that these foreign local language titles are doing extremely well. The global box office is doing extremely well. So if the whole point of them focusing on AI is to not only expand their reach but improve, the expansion, then you can see how this is going to further affect AMC, how this is going to further improve AMC, and why we've said AMC is going to continuously grow and become even bigger than it is right now. Now, a big thing we've talked about recently is about how the institutions are trying to divert the people away from AMC and GME. You can see here again, forget GameStop, meme stock traders are now pumping Beyond Meat. Here's why. Now, you can see Yahoo Finance is still trying to get you to forget about GameStop. Retail traders didn't wake up at 2 a.m. and trade 2 billion shares of BYND today, but only 69 million shares exist. Now, we talked about BYND, so I don't want to go too much into it, but it's essentially understanding the fact that we've known the situation for AMC and GME. Now, it isn't to say that that every single apes didn't participate. Of course, some people would have bought Beyond Meat shares, but it wasn't at the cost of selling all of their AMC and GME shares, as these articles are trying to make it out to be. And the big reason for why they're trying to divert, and you can see here, half the swap universe running through one GME basket is insane. We're not talking diversification, it's $1 trillion spider web with 1 cent to know. 2 million baskets, 140,000 stocks, and somehow one UPI touches 20% of the market. And so what we're looking at is just how big the swap situation truly is. We talked about GME swaps, we talked about AMC swaps. Now, if you want a literal example, if you want to see how firms are doing, take a look at UBS. We've known that they inherited AMC and GAB swaps, and we know that they are not in a good position. But furthermore is the fact that these baskets and how they're related to everything else is extremely vast, and it's correlated to so many different stocks. And so the biggest reason for why they don't want AMC and GME to squeeze, to go up in price, is because they realize it will trigger a $1 trillion collapse, and that's what they're worried about. So that's why they're trying to divert your attention. As always, none of this is ever financial advice, so do take class a grain of salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.